Every Monday, I come to work with this giant sheaf of papers that contains some terrific reports on individual stocks, along with what we call top-down analysis from whip-smart strategists who outline what they're seeing in the big picture from their 30,000-foot purchase. The top-downers are exceptional at what they do, although what they do isn't always worth doing. They typically try to rationalize all the big-picture inputs, the Fed, the Treasury yield curve, inflation, wages, housing, and only the soft landing versus recession thesis. Then they come up with price targets for the averages, given their assumptions about the world. Hey, by the way, the Dow finished the day up 100 points. S&P declined 0.15%. NASDAQ dipped 0.21%. Now, see, I'm not a huge fan of the top-down analysis. That's called macro, all right? I like the micro thinkers, the people who analyze the fortunes of individual companies. They manage to gauge prospects. They take inputs and come up with estimates for gross margins, revenues, and ultimately earnings, then translate those into price targets for individual stocks. I find they're pretty much always on their game, always doing their homework, especially during earnings season. Now, these two classes of analysts seem to be totally at cross purposes with each other, like they have nothing in common. The top-downers never seem to stroll down the halls of the research department, checking in with the stock analysts. Hey, how's that? What's the story going? Is that Intel quarter real? I mean, do you really like the Microsoft? Hey, is this the time General Mills is working? No, they don't do that. See, they have their worldviews, and they're hidebound by notions. Like if the yield curve is inverted, we're inevitably headed for recession, or if the Fed keeps raising rates, well, then stocks must come down, correct? I mean, isn't that what happens? At this stage of the slowdown, the inputs that the macro analysts look at are all pretty negative. So that leads to downbeat forecasts and a propensity to want to warn people to sell stocks. Sell.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.